What's up guys? Welcome back to Money Grow, the channel all about making your money grow. This is the 6th episode of my 100K wheel strategy portfolio. I'm filming this video on Thursday, October 29th after market close, so it's been 38 days since I started trading in this account on September 21st, 2020. And I'm currently up $3,948. That's an average of $103.89 per day, including weekends, which I'm really happy with. If this portfolio were a full-time worker, he would be earning an annualized rate of $18.23 per hour, 40 hours per week. Technically, the liquidated value of the portfolio has decreased, which you can see by the graph. But that's the value of the portfolio if I were to buy back all my current open positions, which I'm not going to do. I think a more accurate measure is to simply look at the cash balance as well as the price of the underlying if I had shares, because that's the true value of all the premium I've received plus any equity that I may have. Although the market decline over the past week has negatively affected my portfolio, due to me being relatively conservative with my trades, I don't see my portfolio as being in too bad of a spot. I would be happy to be assigned on all my positions if the market does continue to decline. Since a large percentage of my cash balance was already being used as collateral since my last episode, and because we had a significant market decline this week, I only made 2 trades which ended up using my remaining balance. That being said, today is a short update, but I'm still super excited to share the progress with you guys. Before we get started, I just want to give a quick shout out to my amazing Patreon supporters, our standalone Crow CEO Jorge Ledesma, and our 4 Crow investors Prismatic, Erica, Andrew Paz, and John Harden. Thank you all so much for your continued support. If you guys want to be notified immediately after I make a trade in my wheel option selling portfolio, consider supporting the channel on Patreon. I'll have all that information listed on there. Link is down below. Another really easy way to help out the channel is by clicking my 3 different referral links so we can both get free stocks and free cash. For a limited time, Webull is giving away 3 free stocks instead of their usual 1 or 2, so take advantage of that and sign up as soon as possible. M1 Finance is giving away $10 in cash, and Robinhood is giving away a free stock like Apple or Facebook or many others when you sign up. Links are all in the description. Thank you. So let's jump right back into my portfolio. I started this account 31 days ago with a clean 100K, and you can see I now have a cash balance of $103,948.97. That excess amount is all premium I collected from running the wheel option selling strategy. If you don't know what that is, please watch my explanation video. I'll attach a card right here. This is the spreadsheet that my friend made for me, which helps me track a ton of useful information. I'll leave it on the screen for a few seconds, but please feel free to pause the video if you'd like to look at it more thoroughly. I've also left a link to it in the description so you can make a copy of it and download it for your own use. And don't worry, it's completely free. However, if you want access to this exact version that you're seeing on the screen now, I update it in real time, and I'm granting viewing access to all my level 8 and up Patreon supporters. So if that's something that interests you, please consider supporting the channel on Patreon. Thank you again so much. This is the front page of my Webull account where you can see all my open positions. Again, I'm recording this on Thursday, October 29 after market close. I'm currently using $103,150 of my available cash balance as collateral. And that's exactly what I'm aiming for, to be using practically 100% of the cash balance as collateral at all times. If you guys enjoy this type of content, I would really appreciate it if you like the video and subscribe to the channel. It helps me out a lot. Thank you guys so much. So let's continue where we left off from last episode. We're now on update number 51 for my Patreon updates. INTC Intel. I took advantage of Intel's 10% dive after their earnings report in order to sell 3 puts for a total of $172 in premium. I think it's pretty ridiculous that they dropped as hard as they did. I recently analyzed their financials in episode 4 of my 100K wheel portfolio series, and I was very impressed even with the market price above $50 per share. At these much lower prices, it's such a great entry point in my opinion. I still gave myself a decent downside buffer because the market can remain irrational and I'd rather be extra protected. And it's a good thing I did that because Intel has continued to fall even further. They're rapidly rapidly approaching my strike price of $42.50. They're down 9% over the past week and 14% over the past month. I really wouldn't mind being assigned if they continue dropping though. Update 52, which is our final update for today, WBA Walgreens. I sold puts on Walgreens before, but I didn't dive too deeply into their financials. They just hit a 52-week low today, and I believe they're way undervalued and will be a good rebound stock as they shift their strategies to growth and profit. I'm a big fan of their partnership with Kroger because it shows that they're actively searching for ways to strengthen their market presence. They've also been able to lower their cost of goods by partnering up and pooling purchases together. And it's so impressive how their stores have the ability to reach 80% of US consumers. This will become very beneficial for testing as well as when a vaccine finally comes out. Their 1-year stock chart shows a massive decline of 38%, and over the past 5 years it doesn't get any better. They're down over 59%. Over the past 10 years, they've barely made any progress, only being up 1.3% in an entire decade. As far as their financials, capital structure shows a small market cap relative to their brand name and market presence that they have. Their cash pile compared to debt is unfortunately looking a bit miserable at the moment, so they definitely need to execute on their growth strategies in order to have a real turnaround. Income statement shows massive revenue in relation to their market cap, with a large portion being gross profit, but their net income is practically non-existent, which is why they've been lagging really hard. Profitability shows great potential. They just need to focus on more profitable ventures like they have been and continue partnering with other companies to lower costs, become more profitable, and expand their reach. Their dividend is probably what's driving many people toward their stock. They have a yield of 5.41%, and they're considered a dividend aristocrat, which means they're a company that has consistently raised dividends every single year for at least 25 years in a row. So based on that fact, it does look like a great opportunity to capture that high yield. As of recently, most of their dividends have been fueled by debt, but it's doubtful that they'll sacrifice their 43-year streak of raising dividends. Valuation shows a very fair forward PE of 7 and an attractive price to book ratio of 1.45. Obviously, Walgreens is struggling at the moment, but their stock price greatly reflects that. So while they're a risky play, these prices present a decent opportunity for entry in my opinion. So those were all 2 trades I made since my last episode. I hope you guys enjoyed my 6th portfolio update. If you have any comments, questions, or suggestions, please comment down below. I'll be reading every single one. Remember to follow all my trades on Patreon and get your free stocks in the description down below. Thank you guys so much for watching until the very end. I hope you'll be back for future videos. And as always, please subscribe, hit the notification bell, like, and comment. Have a great day, and I'll see you next time.